Profit in association with NSC.
This is Breaking Market News. You're with NDTV Profit, and we're focusing on PDC India Financial Services, which has delivered a threefold jump in its net profit in the fourth quarter. The stock is up 1.5% in trade on a day when actually pretty much across the board you'll be finding losers more easily than gainers. 40 rupees on that stock. I'm pleased to welcome Ashok Haldia, Managing Director and CEO at PDC India Financial Services, which is often referred to as PFS. So thanks very much for joining us. I'm going to stick with that net profit number. It's jumped threefold. How would you sort of describe the quarter?
This quarter also means the end of the year, so the yearly result as well as quarterly results. So if I first focus on the yearly results, our profit before tax have increased from 245 crores to 531 crores. This increase has been for two reasons. One is the significant growth that has taken place in our loan book, about 36% growth in our loan book. And the second thing is that we have divested one of our equity investment, which led to profit of 207 crores. Now, even if we exclude that one-time profit of 207 crores, our profits have increased from 245 crores to 325 crores, so nearly about 33% jump in that. The third thing that has contributed to this is that we have earlier taken a strategic decision to diversify our portfolio and risk associated with that from a power and the renewables to also to the other economic infrastructure and the other areas like the port, annuity roads, the energy efficiency, transmissions, etc. That has given us the sanction of more than 10% of our aggregate sanction so far. What is significant this year has been that our aggregate sanctions have crossed more than 15,000 crores, and our turnover, annual turnover, has increased the 1,000 crore mark.
Okay, so Mr. Haldia, I'll just be with you in a minute. Worth noting that Cadla in the fourth quarter has delivered a profit of 390 crore rupees. The expectation, well, broadly in line with expectations, the number we put out was 396 crore rupees on the profit front for the fourth quarter. The sales have come in a little lower than what the expectations were on the street. The sales number for Cadla in the fourth quarter is 2,380 crore rupees. The expectation was 2,500 crore rupees. Took a bit of a dive, the stock, and then picked up again. But it's all relative. Volumes are building up. Watch that stock. Mr. Haldia, thanks for your patience. Just, I wanted to get a sense from you on the share of sanctions that you made to the renewable energy sector, because it clearly seems there's a portfolio rebalancing happening in favor of renewables.
Yes, certainly. As I said, our focus has been, and I believe in the years, at least in the next years to come, would be the renewables, considering the potential that exists and the regulatory and the government emphasis on that. We have of our total sanctions, about 52% is in the renewables, and about, as I said, about 15% is on the other areas which I have stated. Something around 20 to 25% is our the thermal loans. During this year of entire sanctions, more than 70 to 75% has been in the renewables and primarily the solar and the thermal.
So, FY17, let's look forward a little bit. What are going to be the main sort of drivers for growth?
Two things in the renewables also. There are new emerging opportunities that we would continue to focus. As I said, related to the renewables, like I'm saying, the rooftop that's going to come out, distributed generations, and then also the energy efficiency measures. Other than the generation projects itself, the second thing that we look, the lot of impetus being given to the transmission projects. And the annuity-based roads, where the last mile funding has become very critical, an institution like us can certainly play a very important role. Some of the ports are in the expansion mode, and we are focusing on the expansion rather than the greenfield, because in those ports we know the track record of their performance. And and then there are other emerging opportunities in the sector. So our focus would be the generations in the solar and thermal, and then the emerging opportunities as we see in the transmission, the distribution, or for that matter, into other related economic infrastructure.
So what risk do you see to asset quality? You know, you have an infrastructure loan portfolio. Also, for example, in the renewable space, media reports suggest that, you know, you've addressed the liquidity concerns of renewable energy companies because they were getting their payments late from the state electricity boards. Hence, I come back to that central question, which is, what are the risks to asset quality in FY17?
The first thing is that as far as we are concerned, we are not facing any recovery problems from the renewable projects, bearing an exception here and there. For example, a project in the Maharashtra, and we know the regions, but we are still able to, recover the dues with some delays. The second thing is the risk is inherent in the financing business. So we are aware of that, and particularly when there are uncertainties and the risk around the power sectors and the different related sectors, as you have been pointing out. But we have followed a different strategies, because we are not guided by a certain number of sanctions and the disbursements. What we are looking into a healthy growth, a sustainable growth, and for that it is not difficult with so much opportunities around to identify a good projects and the good promoters. For example, in the next 2 years, the solar and the wind power projects of the order of 50,000 megawatts is expected to be implemented. We are a prominent player. I don't think finding a good project and the good promoter. So that's one area how we are trying to ensure the quality. But that despite, you are right, the risk would remain, and the risk, and indeed the risk remains. We are constantly engaged with the individual projects and the individual promoter, whether they are paying our dues or whether they are delays in those dues. And then we are taking project-specific initiatives to address the current as well as the likely scenario of their going into a default mode. Like we had the NPAs, and also as we had reported that we have also made provisions of the assets where the COD have gone beyond the 2 years. We are constantly engaged with them, and then as a result of our engagement and also the emphasis with the RBI and the government is giving, those projects are seeing some positive signs in terms of getting the financial closure for the overrun. One of the projects have achieved the COD. So those are the positive, but risk remains. For example, the projects have achieved COD, but for a small amount of working capital requirement, they are not able to operate the capacity. These kinds of problems still remains, and we are constantly engaged with them.
Well, Mr. Haldia, I'm going to leave it at that. Thanks very much for joining us this afternoon on NDTV Profit. Cadla is the stock that